And welcome to our third quarter investment outlook, where we'll be taking you through a quick look at Q2 and what to expect in Q3. A quick reminder before we get started that this information should not be taken as investment advice, personal recommendation, or an offer of or solicitation to buy or sell any financial instruments. So let's get started. A quick look back to Q2. What were some of the key takeaways that we saw in the second quarter of 2024? Well, firstly, US mega caps set all-time highs once again, led by AI. The S&P 500 and NASDAQ continued to move higher. These were led by semiconductor stocks, Nvidia, the Magnificent Seven. They continued to deliver. Nvidia reached a $3 trillion market cap and for one point was the largest company in the world. Big tech's annual spend pushed over $200 billion and continued to dominate markets. Locally, though, the ASX didn't have such a great time. Utilities and tech led the performance thanks to Wall Street leading our tech sector higher. On the utilities front, AGL Energy and Origin Energy both saw strong gains, and that again comes from those growth drivers like AI. The power demand that we're expected to see coming from AI led those stocks higher. The winner, though, was Telex Pharmaceuticals with a 40% gain. On the macro front, the RBA pushed back on rate cuts. The Reserve Bank left the cash rate at 4.35% throughout Q2, but stated their tolerance on inflation was low. And markets now don't see a rate cut until the first or second quarter of 2025 after a few higher than expected inflation prints. Which moves us on to that second point. Australian inflation has remained a tough battle for the RBA, and it continued to surprise to the upside in the second quarter. June's reading put a hike back on the table, but what we are starting to see is the labour market show signs of cooling. But ultimately, the RBA isn't convinced that they have enough data yet to push us closer to those rate cuts. Inflation is still niggling away. It is still sort of higher than expected. So the RBA are going to push back and keep rates higher for longer. So just having a quick look at performance and what to watch going into Q3. From a performance standpoint, we mentioned it there, the Magnificent Seven led the way again. We saw an improvement in China with slightly better data, but that has tailed off in recent weeks. The NASDAQ obviously continued to push higher, but on the other side, we saw weakness in Japan and crypto assets, specifically Bitcoin. Looking ahead, some of the key events to watch in the third quarter. We've got a big third quarter coming up. Plenty of events to watch. Q2 CPI for Australia, I think, is probably going to be the key event to watch. Will really give us a better understanding of whether the RBA will hike again. We've also got the Fed's rate decision at the end of the month. We are getting closer to a Fed rate cut, but we're likely not to see that until September. But that will be coming, we think, in Q3. But in August here, we have reporting season kicking off in Australia. That is going to be another key event to watch alongside quarterly earnings in the US. Now we're going to look at Q3 and what we think will drive markets in the quarter. So firstly, the RBA is likely to keep rates higher for longer. This is really important. Inflation is going to remain sticky. We've seen them stay hawkish. I think a hike seems unlikely, but we have to remember that tax cuts have just been implemented here in Australia. While much of this easing has come from, the cost of living relief measures, which sort of temporarily lowered headline inflation, it does add to the demand in the economy, which keeps inflation higher than it otherwise would be. So that is something to really think about. It could put the local equity market on the back foot, and it will affect rate-sensitive sectors that started the year strong as well. We think that tech will continue to lead on the local market, and defensive assets may come into focus. Then we're going to look to earnings season. We're in the midst of it right now. We're just sort of kicking off. Magnificent Seven, again, will be in focus. Can they keep delivering? We expect Q2 earnings to get close to double-digit earnings growth, and that would be a key driver for markets, as it has been in 2024. As it happens, we expect 8.5% earnings growth from the US, but keep an eye on those second quarter earnings, pushing towards double digits. Rate cuts in the US will support growth assets, but we also should see some of that record cash that sat on the sidelines deployed into assets, and maybe more cyclical, cheaper assets in the US will come into focus in the third quarter. AI continues to be the biggest investment theme in 2024. It has driven markets higher. Nvidia is the clear leader. Spending looks set to continue and drive major stocks higher as well. However, any major slowdown from tech stocks would also slow down the market performance that we've seen from the Nasdaq and the S&P 500, given their weighting. I mentioned it just a moment ago, but the closer that we move to cuts, we're likely to continue to see this rotation from tech into value assets, as well as seeing that capital deployed into those cheaper, more cyclical sectors. Crypto assets, as I said earlier, they were mixed in Q2, but Q3, I think we'll see a little bit more positivity. We'll obviously get that rate cuts, which should bring a risk element back to the forefront. And we're also likely to see Ethereum ETFs launched and traded as well. Look, it remains one of the top assets that investors want to own in Q3. And after some weakness in Q2, I wouldn't be surprised to see some buying going on in Q3 with some better prices flying about than we had at the start of the year. So an overview now of how you are all seeing markets, very much focus on stocks ahead of crypto as we head into Q3, and still heavily focused on US stocks. This is no surprise given the performance that we've seen this year from US stocks. And tech and disruptive tech are still the dominant sectors and themes. But we may begin to see that broaden, as I say, in the back end of 2024 with rate cuts. But AI is clearly a big driver for disruptive tech. And this is a theme that I think is going to play out over the next sort of 5 to 10 years. This isn't a short-term thing. AI isn't going anywhere. And I think it will be, at the top of investors' minds for a long, long time. Then just moving on to our investment outlook. So this is for the sort of the full year, what we see broadly happening in 2024. Look, again, tech, as we say, has continued to drive markets this year, but ultimately we feel that it may be slightly unsustainable. We're going to continue to see a rotation, as I've mentioned a couple of times, into those cheaper and more sensitive sectors. This will continue to happen. Australia may be a benefit of that. We obviously have more sensitive sectors, think financials, think real estate. Materials, again, is one of those sectors that we believe will benefit. So Australia may see a slightly better performance in the second half of the year. But again, a lot of that rests on the RBA as well. Rate cuts have been pushed back. Again, we've seen that locally, but also in the US. The US was seeing rate cuts as early as May in 2024, but now we're having to wait until September as well. Again, we believe that we'll start to see, some of the huge cash that we've got on the sidelines, $7 trillion in US cash in money market funds moving into other asset classes. Think cryptos, think those sort of cyclical sectors that essentially have been unloved for the past few years. With rate cuts incoming, the US dollar will have likely seen its peak and therefore be positive for commodities. A peak in that US dollar will be good for the Australian dollar against the US dollar, and we're likely to see the Aussie continue to outperform against major currencies over the months ahead, particularly the pound, particularly the euro, and of course the greenback. With a more hawkish RBA, the Aussie will continue to benefit, and this will be good news for commodities locally as well. So again, a focus back towards energy, a focus back towards those materials stocks on the local market. And earnings growth, look, disruptive tech has been supported by this AI boom that we are seeing, but we're really looking towards cyclicals that are set for a sharp macro-driven profits rebound. Again, going to be very beneficial to Europe, where we already have seen that first rate cut. But as we start to get closer and closer towards a rate cut here in Australia, even if it is the second or sort of the second half, really probably the first half of 2025, markets are forward looking. So really, we're going to be looking towards those sort of rate sensitive sectors in the second half of this year to sort of really outperform those sort of tech stocks that have done so well so far this year. And finally, crypto, we're going to see that classic supply demand squeeze underway. We had the halving in March of this year, and ultimately supply is just not at the same level as demand right now. We have Bitcoin ETFs that continue to sort of drive demand. If Ethereum ETFs continue to sort of come online as well, overall sentiment will improve, and rate cuts will ultimately also drive investors back towards crypto assets as well. So we see a stronger second half of the year for crypto after a pretty poor Q2, and again led by those rate cuts and led by the positivity coming from that Ethereum ETF. Look, that's it from me. If you have any questions, please feel free to reach out or leave a comment below. Thanks very much for watching, and see you next time.